Welcome to the Contrarian Investor Podcast. We give voice to those who challenge a prevailing sentiment in global financial markets. This podcast is for informational purposes only. Nothing on this podcast should be taken as investment advice. Guests were not compensated for their appearance, nor do they supply payment in order to appear. Individuals on this podcast may hold positions in the securities that are discussed. Listeners are urged to educate themselves and make their own decisions. This podcast episode may have ads and the occasional announcement. To listen without ads or announcements and take advantage of a host of other benefits, consider becoming a premium subscriber. Visit the website contrarian.supercast.tech. That's TECH for more information. Now, here's your host, Mr. Nathaniel E. Baker.
Brooker Belcourt, founder of Covey in New York. Thank you for rejoining the Contrarian Investor Podcast today.
It's great to be back here. I love the content you're putting out.
Thanks so much. Yeah, it's great to have you. And we've talked before about this platform that you put together, the Covey platform, which basically takes the best retail analysts. And your thesis is that these retail analysts are able to outperform institutional analysts and sell-side analysts. And we talked about that last time. So we don't want to get into that too much now. But what I'm curious about right now, as we record this on August 15th, is what your best analysts are picking up in the market today and what consensus, if any, has emerged among them.
It's a great question. I would say we have 3 analysts guiding our Legends portfolio. So these are the top 1% of traders from our community of hundreds, and they're guiding this portfolio, and they have 3 different views. And so it's different than investing in another fund where you may have one story you're telling and it's consistent, you're bearish, and all your positions reflect that. I think ours is a little unique in that we have 3 analysts who are living all over the world in different places. One's in Denmark, one's in Denver.
We had the Danish guy on the show, I think.
Yes, exactly. And so they have different educational backgrounds. They have varying perspectives. And so one is more of a like quant style trader and long momentum, I would say, is the most. The other one is a Druckenmiller style investor who is looking at a lot of technical analysis and making plays there. So less bearish or bullish, just looking for good stocks to invest in and riding that. And then the final one is another quant trader who has a really interesting perspective on correlation, who right now is just long volatility. And so I guess you could argue that's a little bearish considering the market's been going up as of late.
Yeah, and the VIX has not had a good time of it this year at all, especially if you look at the levered versions in the ETF. But maybe just to backtrack a little bit. So you say these are the best analysts that you have, and this is based on their track record. Obviously, past performance, not a guide to future results, but the returns here have been impressive, right? And
we just have this thesis that I want the best people on the planet to be managing my money. So we built this global community, inviting thousands of people to participate. And we narrowed it down to hundreds. And then from there, we took the top 1%. And what we do is we allow anyone to deposit money and co-trade with them. And so with the belief that the top 1% over the last 12 months are going to have the best shot at beating the market going forward. As you say, there's no guarantee as to what happens. But when you go and recruit a baseball team, you're generally going to go and get the top 1%. When you look at like the World Series of Poker, you're going to see some consistent winners at the final table. And so our belief is that, yes, track record does matter. And especially as you get into these upper echelons of talent. And so we create about 20 positions from these top 1% of analysts. And we're here today to just talk about what those 20 positions are, because it's a fascinating story.
Yeah, maybe. So let's have it. So you said the long momentum, those are the general themes, but what are these 20 positions? Maybe you can just read them off.
Yeah, we can jump into it. So I'd say they're into 4 buckets right now. And these things change all the time. And so we can check out the app at any point and you can look and see what they are. But right now there's 4 buckets. There's one that is growth. So that's long, the ones that have been just killing it this year, the Nvidia, Google, Amazon, Apple, and Tesla. And so we've had that exposure on since the beginning of the year pretty much, and it's done really well for the portfolio and it's not gone yet. And so there's that bucket. And then there's a small bucket of healthcare names. So there's about 3 names there: UNH, Lilly, and Novo. And so one of our greatest trades of August was long the ticker NVO, as they passed a really important trial for one of their like miracle type drugs. And so we can talk about that. And then there's another bucket of just like really high quality names. And so this is long, like AutoZone, Old Dominion Freight, like Disney as well as in that bucket. And so just like high quality DHRs in that bucket as well. So high quality names. And then there is, as you mentioned before, the volatility, and that's almost acting like a hedge. And so this volatility ETF is long volatility. So just betting that the market's going to go in the opposite direction. So it's been going up as of late. So if it goes down, this stock will pay off quite a lot.
Yeah, and that ticker is UVXY, I believe you mentioned.
Not a ticker you want to hang in for a long period of time. The fees will completely drain you. So it's not a favorite. I don't love that, to be honest with you, but I really can't influence these legends that much, and they have their views. So
this is interesting, this portfolio, because you have some of these defensive names in healthcare, although biotech is another story. And then you have the growth, and then you have the others. I mean, some cyclical, I could argue, with AutoZone and DHR. So that's kind of like, I guess that leads into your other point about asset correlation, how these things are all correlated now.
Yeah, I think when you look at this portfolio, it's hard to craft this story. And like my background is from the hedge fund world. So I used to work at like Citadel and Coatue and Tiger Management. And we would always love to share stories about stocks. And we love doing that on podcasts like this. It's something that I absolutely love to do. But it's really tricky because I think when you're sharing these stories, you're almost like building them for other people. And when you're at these hedge funds, I found that there was a lot of groupthink. And so you share a really compelling story and people love that narrative and they all jump into the same stocks. And this groupthink happens a lot on Wall Street. There's a bit of an old boys club there, and you end up with the same ideas in a very consistent looking portfolio. So you can look at hedge funds 13Fs and they look very similar. And so the cool part about ours is these people are from all over the world and they have like really different perspectives. And so this portfolio is both bullish and then like neutral, trying to find other markets that are making money, as well as the same time as bearish. So it's these 3 different views all expressed into one portfolio. And I think that's what makes it outperform in so many different markets. And so it's able to beat the S&P over long periods of time as the market shifts from 2022, not favoring growth stocks at all, right? Favoring much more defensive stocks and in a much more bearish market. And now shifting to 2023, where people are loving growth stocks. It works in both. Because you have all these different perspectives, because really macro is so hard to try and predict. And so having a lot of unique perspectives on it all, I think really helps.
Sick of me yet? Become a premium subscriber and avoid all ads or interruptions. Other benefits as well. Visit contrarian.supercast.tech for more information.
It sounds like if I were to zoom out here and take kind of the 50,000 foot view or whatever, it does look like the portfolio is kind of positioned for things to continue along their trajectory, with no major upsets, I should say, to markets. Maybe the VIX one is the one thing. I mean, it's referred to as a disaster hedge. Probably not quite fair to call that anymore, but what do you make of that?
So this one comes from one of the more interesting viewpoints, one of our legends. His name's Mark, and he has this perspective that all assets are correlated.
Mm.
And over the long term, all assets will be correlated. And so what he views is that if you see a divergence in correlation between like an S&P and a NASDAQ, or crypto and the NASDAQ, that is like a short-term phenomenon, and there'll be a mean reversion. And so he's been playing that strategy, and his performance has been phenomenal, just jumping in onto this strategy. And it's really been incredible to watch. But now he's just shifted to be like incredibly bearish. And he sees a lot of these assets doing well, and then he sees this divergence of correlation between the NASDAQ and Bitcoin, where NASDAQ is taking off and Bitcoin is not really. And so he thinks that there's going to be a mean reversion, and he thinks that it has made him quite bearish. And I think he's using crypto as a guide, that crypto is going up with the NASDAQ, and he thinks the NASDAQ is going to come down as a result. And so he's playing it through this UVXY instrument.
Okay. So that's really interesting, because I noticed that too, this divergence between Bitcoin and growth stocks. Say we want about Bitcoin and cryptos, and we're not going to have that conversation now, but just as a gauge of risk appetite, especially from retail, it can be pretty telling. And at some point this year, that whole thing broke down, the relationship between it might have been around the bank failures. If you'll recall, Bitcoin did very well then, and everything else did poorly.
Yes. And then since then, post bank failures, Bitcoin has kind of leveled off around just below 30,000. And then the NASDAQ has continued up.
Right.
And so, his perspective is that there's enough volume and enough institutional investor interest in crypto to make it like a reliable indicator. And so one of these things is lying. And his bet is that they're going to correct. And so the easiest way to play that is through this instrument, which is like a super short-term trade. To be able to say that the NASDAQ is going to come down and be more in line with Bitcoin, because it is really odd that Bitcoin has not done much, considering we're seeing rate projections for rate increases. At this point in August, only I think the Fed is pricing in one more rate increase, or the markets are pricing in one more rate increase, and inflation is ticking up a little bit. Maybe it's just a bump, but that seems like an amazing world for Bitcoin, and it's just not even moving. And there's all these positive news around Bitcoin as well, and it's just not taking off. So the market's telling you something here.
Yeah. Interesting. But that would make you want to not be long Nvidia and the others, one would think.
That's the fascinating perspective. So if my thesis was entirely bearish, my portfolio would look totally different. But here the legends are: we've got one part who's definitely bearish, another part who's super bullish, these long growth stocks, and another part that's just investing in high quality names. So it's a mix. It's really it's rare to have so many different macro views, which I love, because when you think about, you've been in this game for so long, I think trying to project macro, which has so many different inputs, is so difficult. And I think once you're in the game long enough, you realize how hard it actually is, and how few people have successfully done it multiple times. And then maybe they get it right once, but to do it multiple times is incredibly rare. And so when you listen to like people like Ray Dalio, who have been around so long, they're just trying to think about all the probabilities of events that could happen, and trying to build a portfolio that can benefit from all these different events, the potential outcomes of all these different events. And that's what our portfolio looks like right now.
Yeah. Are there any other particularly contrarian ideas that these analysts have put forth that have caught your attention? One could argue that Disney is one.
I think Disney was one. I think the healthcare stocks were very contrarian a month ago. NVO, LLY, were contrarian. I mean, that's been an amazing sector, obviously, for the last decade. There's incredible inflation going on there. I think they're a little bit less contrarian. I think some of the contrarian ones are just a little bit on the Disney side, which has just been getting beat up recently. And then we've got some so like AutoZone is another one that's a little bit more contrarian, a little bit more of a defensive stock. which has
Mhm.
been just a phenomenal stock over like a 10-year track record. These guys buy back so much of their market cap. And so a great stock. If the market does turn south, people will continue to repair their cars. And that's a leader in the three. Like you've got AAP, you've got O'Reilly, and AutoZone is just an amazing one there. So that's a little bit on the contrarian side. And then you've got a couple other ones like PGR and Old Dominion Freight. So these are just high quality businesses that our legends are picking up. And so Progressive Group Insurance Company, right? We all know about them. Stock has been beat up as of late. They're putting that position on right now. And then same thing with ODFL, Old Dominion Freight Line. And so that's another one that has done a little bit better year to date. That one's probably playing on a belief that potentially inflation could come up, and there's a little bit of a reshoring trend happening in the US. And so this is going to be a beneficiary.
Yeah, ODFL is up almost 50%, 47% this year, which is pretty good.
One.
Interesting that what it was not mentioned, I did not hear anything about retail stocks. No Walmart, no Home Depot, no Target. I guess AutoZone potentially is a retailer, but again, a unique proposition there because of its business.
Yeah, it is
what do you make of
interesting.
that? Yeah.
And I love to talk about the stocks that are not in there.
Yeah.
And so, yes, there's definitely a lack of retail in there. We only have one oil stock. Our legends love crypto historically. They've been very long crypto during the bull markets, and there's no crypto in here right now, which I think is fascinating because we do a lot of cool stuff in our technology stack, where we use the blockchain to help our legends post their trades to create an immutable track record. So they're very savvy with using Web3 and crypto products. And for them not to have any crypto exposure, long or short, is really telling. And so I think they're just a little bit confused about the price action of Bitcoin and not willing to jump in there. I think the last time we were on the show, we had a great call on crypto too. So
yeah,
I encourage you to listen to that.
Yeah, definitely. Any other anything else that's missing that's particularly noticeable? Trying to think here. No auto stocks, no tech.
No auto, just there's a lot of growth. There's about 6 names on the classic growth stocks,
right?
Which I think is just you have to be long those stocks.
Yeah, fair. But no IBM,
no, none of that.
Yeah. Okay.
The only other ones are like Timo, Thermo Fisher, and then ASML.
Another thing is stocks. Yeah. Okay. Another thing worth mentioning is that these are all U.S. stocks. I mean, obviously, U.S. companies are all international these days, but didn't hear anything in terms of European anything, and nothing out of Asia either. If you look at the big Japanese stocks, your Toyotas, obviously it goes into autos, but then other things aren't there.
So that is maybe a function of our platform, and so we're a U.S. regulated company. We're an RIA, and so all our clients who invest into the Legends portfolio are U.S. investors. So they're U.S. retail investors, and so we can only put them really in U.S. stocks.
But that can include ADRs.
That can include ADRs,
and all the ones I mentioned have ADRs. So
got it. So then no, we don't have exposure through the ADRs right now.
Interesting. And no ETFs, none of these. Other than the VIX, like no country specific ETFs. Have they gone into those before?
We have, yeah. We were in BOIL for the last few weeks, and so that's a natural gas, I think 2x exposure long natural gas ETF,
right?
And so one of the legends, who's that Druckenmiller style, was pretty long that one for the last month or two, and I think it was up about 20% and just pulled out of there.
Yeah.
And so that was a great trade, but yeah, no longer in there.
Okay. And no country specific ETFs, the FXI China or the EW, whatever the Brazil one is. Yeah.
Not right now. No.
Okay. And then speaking of cryptos, you actually have a coin that on your site, right? Talk to me about that. How does that work?
Yeah, so we have these 2 parts, right? We have the Covey Legends app, which is what we were talking about, these 20 ideas of the top 1% of analysts. And then we have the Covey Training Club. And that's pretty fun. And I think a lot of your listeners, if they want to be the best investor, and are more interested in becoming the best and testing out their strategies, I would definitely encourage them to check that out. And so this is a global competition that's open to anyone. And so you can create a mock portfolio. It's totally free, of ideas like long Tesla 10%, long Bitcoin 10%. You post it, and we track about 50 metrics every 5 minutes for you. And every month we have a competition, we have a leaderboard, and every month we pay out tokens to the best performing analysts over the last month. And this competition is not just total returns, it's based on about 6 different metrics that we've come together with our community to decide, all these great analysts to decide how to find the best, which is a really important discovery process. It's so much more than total return. There's ways to gain total return in the short term. And so we came up with a way that rewards people on a short-term basis while thinking about them on a long-term basis. And we call it the alpha algorithm. And there we pay out these tokens. And these are the Covey tokens. And they allow you to have some governance over our community. They allow you to like stake to earn more Covey tokens. And they also allow you to get discounts on the Covey Legends app. And so you can get 50% off. And so it's a cool way for some of the people who are doing really well in our competition to get the benefit of the Covey Legends app.
Yeah. And by the way, the Contrarian, we are on there, but I haven't updated the portfolio in a while. There's no way to automate this, like you can link it to your broker or anything.
We if you're savvy with APIs, we can do that.
I see.
Depending on your broker. But yeah, we have the Contrarian community, and so we have a couple of your analysts on there that have appeared on your show.
We have also, but separately, like my own portfolio is on there, although this does need to be updated. Anyway, and that was doing quite well for a while, from what I recall. I need to update that. But yeah, check that out, covey.io. So if you're an analyst and you want to join this community, how do you go about doing it? Other than you go to the website, it's all pretty self-explanatory. What kind of stuff do you need?
Yeah, we basically have the community. If you want to become the best, you just go to covey.io and you can start competing right away with just entering some names. You need to know a little bit about MetaMask or connecting a wallet, like a crypto wallet, because what we do is we really value people's track records, right? It's everything to us. It's not what school you went to or what country you live in. It's how well your track record is done. And so we want to make it like immutable. We want to make it auditable, and we just don't want the ability for anyone to forge it. And so we take the string of ideas that you have and we post it to a blockchain. And so we do that stuff for you, and that allows you to own your track record, and it will live there forever. And so that way you have a timestamp and a ticker stamp of, you were long NVIDIA in late 2022, and you can claim that you actually had that trade just by showing a blockchain block number and a transaction to show that. So it really matters for us to be super transparent, super auditable if we're totally relying on track records. So yeah, you just enter a few trades and then we begin the tracking and you're automatically entered into this competition.
Very cool.
And so it's quite easy to use. It's like we've tried as much to gamify the investing part of Covey, of finding the best and really make it a fun competition where the leaderboard is updated every single day. We have also a bit of a team sport element to it. So we launched like the first esports for investing.
Oh yeah.
And so we have this investment league. And what we do is we have different communities from different countries coming together. And these are people who actually like meet up in like Australia or Japan or Canada. And we have a competition where your performance, let's say you're on Team Canada, your performance is rolled up. The 10 of you analysts would be rolled up together to create one team. And the performance of that team is then competing with Team Japan or Team United States. And the winners of those, each team that wins will be rewarded, thousands of dollars. So it's a really fun competition. Investing can be lonely, adds a bit of a team element to it. And we do some like cool content associated with it every couple of weeks. We get some commentary to tell you what's going on in the league, so you can stay in tune. We've got a leaderboard there as well.
Very cool. All right, that's awesome. Yeah, Covey.io. And maybe in closing, you tell us how else you can find out about you on the various social media and stuff. And I'll put all this in the show notes as well.
Yeah, we're on Twitter, and we're on so Covey Invest on Twitter, and then we're on Instagram as well, Covey Invest, and we've got some great content on YouTube as well, Covey Invest, that so COVEY, that'll share like what's going on with the Covey Training Club, where we're trying to find the best, and what's going on with the Covey Legends app. We're allowing anyone to invest with the best. So you can kind of pick your side, what you're most interested in, and dive into that.
Cool. Thank you very much, Brooker. I'll put all that in the show notes. And with that, we thank you for listening today. Thank you all for being here. And we'll be back here again next week. See you then. Bye.
Thank you for listening to the Contrarian Investor Podcast. We hope you enjoyed this episode. To subscribe to this podcast, simply open your favorite podcast software and search for Contrarian Investor. Follow us on social media by searching for Contrarian Investor on Twitter and Instagram. Send us your thoughts on feedback@contrarianpod.com. We look forward to speaking to you again next time.